What is up, Trade Pros? Victoria from Trade Pro Academy. I hope everyone is doing well. And today we got yet another video for you guys. It is the ultimate breakout strategy for trading in a bear market. Now, as we know, we are currently in a pretty strong bear, and I don't think we've seen the lows just yet, as I'm doing this in July 2022, right? So maybe by the time you watch this video, it could be a lot different. Now, in bear markets, we tend to see stocks really just fall off a cliff, and when they do, they present a lot of opportunity, and that's exactly what we're going to be doing today. We're going to be looking for those breakout momentum moves that do represent a lot of that opportunity in the stock market in a bear market. So, if you guys are super excited about this actionable real trading strategy that you can go back test and apply, smash that like button, hit that subscribe button, and ring that little bell to notify you when we go live and drop videos just like these. And why don't we just get ready for this intro and dive right into this video. So in big market downturns, there's usually a large drop in specific stocks and specific names in specific sectors, right? When we see higher volatility names like high beta names, which could be tech stocks or other very volatile individual stocks, when there's a lot of movement in the overall market and the economic conditions, these stocks are going to move a lot and they're going to drop the hardest and the fastest. There's been a lot of stocks that you take out of the growth space, the info tech space, and all of those technology-based areas that have dropped over 50, over 70, over 100% from their tops, right? And these breakout opportunities are the ones that we want to capture, and we're going to do this in a very simple way throughout this video. Before we do that, we're going to talk a little more about what it takes to look for specific names like that, right? What kind of names are you exactly looking for? Where do you find these sectors, and what names do you extract from those sectors? Like I said, in economic downturns, we have to understand what sector rotation and sector analysis is. We have 11 main sectors in the S&P 500, and when we're in a late cycle to recessionary environment, naturally a lot of those sectors are going to get hit. You can see, I'll just put up a year-to-date chart of the 11 sectors and how they did since the beginning of the year. So about 7 months into the year, how they're doing. You can see that energy is going to be the only green one. Now, yes, a lot of things are red here, except the darker reds are the ones that typically do a lot worse in these downturn conditions, and then the light reds are ones that obviously they're going to do bad because generally stocks are falling, but they haven't done as bad and they could be a little neutral, right? You see like consumer staples, for example, is in the light red. So what's in the dark red? We have tech, right? Mainly tech specific things. So what we're looking for is names that react really aggressively to smaller movements in the overall market, right, which represents a portion of the economy. So the whole economy is represented by the S&P, right, for simplicity's sake. We are looking for names that have much more volatile movements, whether it's a reaction to the upside or downside, and those are what we classify as high beta names, and they can be found in consumer discretionary. They can be found in consumer discretionary, right? This is also referred to as growth. We have the ticker symbol of the sector as XLY. They could also be found in infotech, right? XLK, general technology space. They could also be found in the communications services, right? That sector in itself. So when we look at each of these sectors, you might be wondering, okay, what stocks are in there? And just to give you an idea of which names are in these in the S&P, I'm just talking about these like super mega caps. You'll notice that a lot of these names have had a pretty tough year since their tops. For example, if we dive into the info tech space, the tech space, we got names like Nvidia, we got Microsoft, Apple, CRM, right? If we dive in the communication services area, we got Google, we got Meta, Facebook, right? And those have done very poorly throughout the year, especially Facebook. We've seen a lot of breakdowns in that name. And then consumer cyclical / discretionary, call it what you will. We have names like Amazon, Tesla, even Home Depot and Nike that haven't done so well. So if you just go and take a look at those specific stocks and those specific charts, you'll see that they have substantially dropped from their highs. Now we also have smaller, medium cap, I would say, not quite large cap, but mid cap individual names, some large caps that are from the growth era. Remember in 2021, we had this massive growth era and there was all these growth stocks that emerged. Upstart, we had Affirm, we had, what else was there, right? There was a plethora. We had Teladoc, right? All those massive growth names. that got a lot of love. You pretty much what you're doing at this point is looking at the ARK fund. You're looking at Kathy Woods Goins and whatever she's got going on there. A lot of those growth names have been really good opportunities for that downside and that break. So now that we understand where we're looking for these, why we're looking for them, the next step is to break down the strategy, which in essence is not that difficult, right? It's going to be, like we've seen multiple times before, a volume profile trading strategy. It's really, really easy when you watch a few of our volume profile videos because you can see the effect of distribution theory on breakouts. So breakouts, what is a breakout first and foremost? A breakout in a bear market is when a specific stock or asset, whatever it is, loses a very key low or a key support area and it falls through. The theory behind that is when you lose a key area like that, just as if you break through an all-time high, you're going to get an extended move, it's because that area, especially if it's a huge base that's been tested multiple times, has not been, one, traded in a while, and two, every time it was tested before was getting bought up aggressively, meaning that there is a lot of stops to the downside through that area. Now, especially if we look at the volume profile and there's very limited volume under those areas, that becomes the potential for a free fall trade, right? And when these trades go and when they break out like this and they move aggressively down 10, 15, 20%, they're extremely profitable. So why don't we run through this strategy? We'll take a look at a few examples and we'll review. So what you're going to need, very simply put, is going to be a volume profile. Now, you can use this on TradingView and you can look at any individual stock. What we're going to do is we're going to look at it on a daily perspective because I'm just going to start with the assumption that we're going to swing trade this strategy. So if we look at this on a daily perspective, what we're going to need is a volume profile on the visible side, right? On the right-hand side, we're going to need a volume profile. Now, this visible range volume profile, what it does is it shows us what is visible on the chart on a volume profile perspective. So if we have 2 years on the chart, for example, it'll show us the volume profile for 2 years. Now, a quick aside, on the volume profile, what you're going to need to identify is key ledges and distribution blocks. If you're unaware of exactly what that means, why that is, please check this video out and we'll get right to it. But just very quickly, a key distribution is an area where there's multiple high volume nodes and thick volume in one singular block. It drops off to no or very little volume, and that is when that distribution ends. So what we're looking for on the breakouts to the downside are these distribution blocks. Now, there's two ways to go about this. One, we're currently in a distribution and price breaks through into nothingness and there's no volume below. Or two, we're coming into a fat distribution block, and when that happens based on auction theory, when you enter a big distribution block, you're looking for the bottom of that distribution block. Now, I like option number one better because when there's no volume below to catch price, it free falls a lot more aggressively. So you can see in the image here on the spy, we'll put it up, we have three main distinct blocks, one at 412. You can see that is where we lose the big distribution and price just free falls under that level, right? This area falls down to like the 395, so a very significant move in that respect. Now, when we break through that, right, it continues that push, we rally back into it where price holds. Again, that's not necessarily a breakout, but it can be used. The next breakout area around 395. Now, this is the start of a distribution block where we're anticipating price to come into that 365. 365, the next distribution block to the downside where we break out. So based on this image, what this strategy holds is that we're looking for, this is just a general ETF, so it may not move as fast, but we're looking for a specific move through the bottom of a distribution block where there's a thick amount of volume, and on the receiving end to the downside, there's very limited or no volume for at least 5, 10, like 20% to the downside, so we can get that extended move. Price can travel to the next distribution block, and we can pick out that breakout point. Now, with these breakout strategies, you can use them with equities, you can use them with options as well, so keep that in mind. Now, if we look at another one here, we got CRM up on the screen. Same thing. We identified two levels. The first level is huge. It's very, very important at 210 on CRM. And we can see that huge distribution block exactly where we have that potential push through the distribution block to the downside. Now notice, we have a 20-point drop under the area down to 190 where there's very limited to no volume where price is expected to go into very easily. Now under 190, we have the start of a new distribution block, which could be an acceptance, again, for another breakout point. So that's the combination of 1 and 2 put together. Now again, to review, You can do this with stocks or options individually. This is a very, very simple encompassing strategy. Number one, find stocks that have high beta, big mega cap techs that are gonna do poorly and that they're gonna do worse than the actual index itself based on the current economic conditions in a bear market, right? You have growth names. You can look at Kathy's ARK fund, right, to pick out some names there. Take a look at them on a chart. You've got mega cap techs, right? You have consumer discretionary names. You have a plethora of things to choose from. Number two, we'll go and identify on a volume profile chart, is there distribution blocks that one look like they're gonna break soon? But more importantly, are those big distribution blocks so sound that they've been tested multiple times and we're coming into a low distribution block to break into a low volume area? And then finally, you can piece it together with options or stocks and manage those positions. So this was the general breakdown of a breakout strategy in a bear market, right? How we locate it, how we look at the individual names, right? And how we use the strategy itself. So if you guys enjoyed this video, this is a very actionable video. I want you guys to go and replay some of these scenarios, back test it, and let me know what you think. This is a really, really strong strategy in a strong bearish market, which is exactly what we have right now currently when I'm doing this video. So if you guys enjoyed it, go check out that options masterclass on our website where we talk more about bear markets. We talk about how we can identify potential bottoms, swinging them, looking at market internals, and everything in between. So go check that out. And also I want you guys to drop a comment down below. Do you guys trade the short side in stocks and options? Let me know. Where's the next market bottom? I'll catch you guys very soon. Don't forget to smash that like button and subscribe button. And this is Victoria from TRADEPRO.